Welcome everyone, and let's get this started. If you are here, just let me know that you are here. Indicate you are here. Anyone that is here, let me know that you are here. All right, welcome, Chris. How are you doing? I hope you're having a good. I hope you're having a good Xmas. I hope you guys can, and I hope you can hear me clearly. Yeah. All right, cool, 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 cool. Who else is in the building? Let's get this. And so far, can you just tell me what you've learned so far? Like what you've learned so far from me, like the moment you start teaching, the moment I start teaching you guys, what have I listened, like have I taught you guys? Can you guys just highlight it for me before we go to the next level? I told you guys nine. Yeah, nine. That's what I told you guys. And where is Daniel and where is Tejiri? Okay, Daniel, welcome. And you guys, like, what have we learned so far? We've been doing some teachings, and what have you learned? Like, what have we spoken? What did we talk about? Just know that so far we've spoken about this and this. So what have we what have we talked about? Okay, firstly, you identified to us that there are two market trends, up and down trends, which is bullish and bearish. The buying and selling momentum of the market will learn to change your character This is when the market breaks its usual structure, either from bullish or bearish. Okay, we learned about lower highs, lower lows. Okay, we learned that there are three types of breakout structure: single leg, double leg, triple leg, and so forth. Okay, we learned breakout structure, which is when price breaks. We learned type of breakout structure. Okay. We learned how the market moves up and down trend, consolidating, and we learned point of interest. Okay, or we can see other block. Okay, so let's say number one we have market structure. We have market structure, which is identifying the market condition. And we have change of character, break of structure, have point of interest, consolidation. Consolidation means the market is stable and you should always avoid it. Yeah, consolidation, the market is not showing you the direction that it wants to go. So we still have one more thing that this thing I spoke about. And what is that? Still have one more thing. We still have one more thing. That's not all. We still have one more thing. And it's important that you guys remember on your own. Very, very important. No, still have one more thing, and you guys need to remember because it's very, very important. If you guys don't remember, then that's very, very bad. No, like I thought something here. Dealing range. Yeah, 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 yeah. So dealing range. Dealing. I've said it already. Like, where did you say it? I didn't hear anything. You said consolidation. Yeah, 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 yeah. You said dealing range. Yeah, yeah, yeah. So the next thing we are going to be talking about is liquidity. Well, the next thing we are going to be talking about is liquidity. So liquidity is going to be our next topic. And what is liquidity? So liquidity is what we are going to be talking about, and liquidity is just like the fuel that moves the market. The market cannot move from point A to point B without liquidity. Liquidity. Let's say you have a car. No, 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 no. That's not liquidity in trading. Daniel, that's not liquidity in trading. In trading, liquidity is like a fuel. Let's say you have a car that you're driving. For your car to move from point A to point B, it needs fuel. And the market is always going towards liquidity. So that's what liquidity is. I'm going to show you guys now. Remember this stage trading. So let's say a scenario here. We have a market going in an uptrend. We have a market going in an uptrend. We have a market going in an uptrend. You see this move right here, because we are taking out. You see this in liquidity is always rest on the high. If the market is in an uptrend, we have liquidity on the lower low here, because as we are coming down, we did not take. Okay, see, so there are orders here. People are buying from here, and as this market is coming down, it did not come and take out these people. So the orders are still valid. So we have an order here, we have orders here, we have orders here, we have orders here, we have orders, and those orders are protected. Do you understand? The orders are protected. The orders are protected there. So, like, the buying power here is still protected. It is not being taken out. So that is where liquidity is at. Whereas, as you can see, this high is being taken out. People that are selling from here, they are being taken out. You get? They are being taken out. took out this high, took out this high, we took out this high, and yes, and we also took out this high. So in this scenario, it's showing you that people that are buying here are being stopped out. If you sell from here, if you sell from here and the market is going and you did not close your order, as the market is coming, it has stopped you out. So there's no order here. All the orders on this up are being filled. You get, so the market is in an uptrend, and every sell order that is up, every buy stop, they are being filled. So in this scenario, where are the liquidities located? The liquidities are located on this low right here, because these lows are protected. The market is not taking them out. So these lows right here on an uptrend, these lows are protected, and we have our liquidity resting below those places. And the same thing goes for a downtrend. Let's say we have a market coming down like this. We have a market coming down. We have a market coming down. Have a market coming down. So you can see these lows are being readed by the market. The market is taking out orders here, so there's no liquidity there. The market took out this low, so all the orders that are there are gone. There's no active order there. All the orders are gone. You get, all the orders on the low, they are all gone. But here, these highs, we have orders here. You get, we have orders here, orders here, orders here. So the market is going down, going lower, lower, and it is keeping liquidity here. The orders here are valid. The sell orders, people that are selling from here, their order is still valid. If you sell from here, the market coming back, it has not taken you out, so your order is still valid. If you sell from here, the market has not taken you out, your order is still valid. So the liquidity is now resting above this high right now. In a downtrend, the liquidity is resting above the highs of the trend. And in a low trend, in an uptrend, the liquidity is resting below the lows of the trend. You guys understand? Okay, so liquidities are just like active orders that have not been taken out yet. You get, so let's say the market moves. Liquidity is like a foil that moves the market, and when the market is on a downtrend, it is hunting these orders. You get, when in a downtrend, we want to keep having lower lows, lower lows. You get, lower lows. So the market is hunting them and making sure it takes them out. When the market comes and take out this low right here, it will go up back. There are people buying from here, thinking the market has turned into a bullish market. It will come and take them, and it will fake up again, come and take them. So the market is taking out these orders. While taking out these orders, there are others here, people that are selling. This selling power that is here, the market is not taking it out. That is where the liquidities are resting. Do you understand? Okay, so in a short definition, liquidity is just an area where there is order, like where orders are resting there. Okay, let's say the market is moving, it's hunting for foil here. Okay, so the market is going from point one to point two. Point two, there's foil in the point two, so the market is going there. Once the market takes the oil from point two, is going to point three to take another oil. You get to take another foil, so that's it. And we have type of liquidities. We have type of liquidity, like areas where liquidity are resting in the market. So in an uptrend, we have in a trending market we have what we call trend line liquidity. And basically what a trend line liquidity is, you see that here in a downtrend here. Yeah, like where you need to go and fill orders. You get where you need to go and fill orders. So that's what it is. So in a downtrend, you see that here there are orders here that are resting. So from this high right here, this is what we call trend line liquidity, because the market is engineering liquidity there. The market is engineering liquidity there. So all this high right now, the market is high. If the market turns to a bullish market, the market is coming to come and take out all this liquidity. All the liquidity is resting here. The market is coming to come and take them out. And the same goes for an uptrend. The same goes for an uptrend. All this low right here, we have active orders that are there, active buying up the orders that are there. So the market is coming to come and pick them out. And majorly, we have two type of liquidity. We have the external range liquidity, external range liquidity, and structural liquidity. Some people will call it internal range, but me, I like to call it structural liquidity. So this is what an external range liquidity is. This is what an external range liquidity is. You get the market is coming, come and take. You get the market. When the market is in a downtrend, we have a trend line liquidity. A trend line liquidity. It can be an external range liquidity. It can be an internal range liquidity, but it's just liquidity. It can be. You can find it in both side of the trend. But when we get on the chart, you guys are going to understand it very well. So two major types of liquidity. We have the external range liquidity and the structural liquidity. Those are two types of liquidity. So where you find your liquidity, we have Trend line liquidity. This liquidity is very very important. It's a topic that is very very important, and you need So these are the types of liquidity. Let me type it here. So we have types of liquidity: the external range liquidity and the structural liquidity. So where do you now find liquidities? Where to find liquidity? We have we have trend line liquidity. We have equal highs or equal lows. Equal highs or equal lows. So those are the places you can find this, and you can find your liquidity. Swing highs, and you can also find them in swing highs and swing lows. If you guys are not understanding, let me know. You need to write all these things down and go into your market and swing highs, swing highs or swing lows. So those are the three major places where you can find liquidity. You get, when you're looking for liquidity, those are the places where you can find the liquidity. Swing highs, swing lows, equal highs, equal low, and trend line liquidity. Come on, talk to me, talk to me, talk to me. Are you guys understanding? Shall we proceed? Are you guys here? Yeah, yeah, yeah. It's getting serious. This is something that you need to like go into your chat. But once we get on the chat, you'll see it very well. You'll be able to listen. But this is something that it will take you a while to figure it out. But you need to do it. Like you need to repeat it very well. But that's the reason why I'm streaming with you guys. This is not like a mentorship where you just get access to videos and you won't be able to interact with the person. You get, that's the reason why I'm streaming with you guys, so you guys can ask your questions and everything. And it doesn't need to be what I'm teaching alone. Let's say you go and learn something on your own and you don't understand. You get, you can come here and ask me, and I'll break it down for you. That's the whole advantage of streaming with you guys. Okay. So I know it's complex now, but when we get on the chat, when we get on the real chat, I'll show you where to find them and how to find them. So it's still a lot. We still haven't talking about like this. These are just like external range liquidity. We'll still talk about structural these things, structural liquidity. You get, so it's very very somehow. Liquidity is a very very complex something because it's the whole ideology behind the market movement. So you really really need to dig into it and understand it. So you guys are going to like, it's going to take you a while to understand, but trust me, when you understand it, it's a game changer. Should we proceed? Want to see which model that I want to populate? I'm not the one that listen. I wasn't the one that defined it. To like, it means another thing in trading. So no be me define them. Yeah, no be me define them. It means another thing in trading. Like I understand where you're coming from. Like even in trading, when they tell you like a coin, when you're trading coins now, they'll tell you the liquidity of the asset and everything. But when it comes to technical analysis, you get, when it comes to technical analysis, what it means in technical analysis is like the fuel where market is going at, liquidity where, like, where this in where others are resting. And when we get to the chart, like, when I'll explain the technicals to you guys so that you understand it very well. This is just like I'm just talking about it now. When I start showing you on the chart, you guys will start understanding why liquidity is defined like that. You get. So let's get on the chat. Let's this is I hope you guys have written it down, the types of liquidity, internal range and external range liquidity, and where you find your liquidity, trend line liquidities, equal highs liquidity, equal highs and equal low, and swing high and swing low. So let's get into the charts. So so now let's talk about like swing high liquidity. Let's talk about the analysis behind the swing highs and swing low liquidity. So on this chart right now, on this chart right now, so on this chart right now, we have these points. So we have this point. Uh, we have this swing high. When you like for it to be a swing high, for it to be a swing high, it needs to be like two consecutive candles or three consecutive candles that swing. You know, okay. Let's say let me find, for example, now look at this candle now. If you want to identify a swing high, Tejiri is not here with us. She says our network is bad or something. So this is a swing high. Look at this area right here. This is a swing high right here. And why is this a swing high? Because when you count these three candles here, one, two, three, this candle, this middle candle is above, is like a head and shoulder pattern. It's like above the this thing is above the two. This one is not up to this one is not up to this one. And you can see from here the market went down before turning again. Look at this. This is a swing glow also. We have one, two, three, all of them like turning, turning like this, like this. You get, the market is doing something like this. So this is what the market is doing. This is what a swing is. This is what a swing is. Swing, swing, like an area where the market swinged from. You get, an area where the market reverses from. So an area where the market reverses from. So this is a swing, and you can see we have one, two, we swing, then we start selling. Look at this. Look at this swing right here. We have one, two, and this is just, look at the shape here. Look at the shape here. You count one, two, three consecutive candles. It might even be two, but they just need to. The market needs to turn from there. It's like swing highs and swing lows are area where the market turns from. You get, after this, you see the market turn, sold. After here, the market turn, but you get, we have another swing low here, another swing high here. So these places are where others are in. Let's say buyers are in this market now. Let's say buyers are in this market. Let's say buyers are in this market now, going up, going up, going up. But when we go here, they sold. Like when we go here, sellers come into the market. You get, seller comes into the market and got here, and buyers came again. Sellers come and buyers came again. So you see this point. You see this point where the momentum change. That is a swing. You get, that is a swing. So that's called a swing high. You get, so that's what a swing high is. Swing high is. Do you understand? Okay, so we have, so those are the place where you find your liquidity. You get, those are the place where you find your liquidity. We have a swing. We have a swing here. You see this swing here. There's liquidity resting there because people start buying from there. You get, after these two candles, we start buying up. You see this high. There's liquidity there because after this place, we start selling, and so on. So you see those are the places where market orders is resting. Look at this. Look at this also. This is a swing here also, and people start buying from there. You get, people start buying from there also. Look at here, we have swing low here. People start buying from here. You see, people start buying from here also. So those places are key places in the market where orders are resting, where liquidity is resting. Those places are places where in the market take out, you should be expecting a move from there, or it should be, that place can be a point of interest, can be a place where you are expecting liquidity. You get, so is it, so liquidity is resting there. So that's a swing liquidity. So do you guys understand the concept of swing high liquidity? Okay, so let's go to trend line liquidities. So for example now, for example now, this market is going up. We are breaking structure, and this market is going up, going up, going up, going up. You can see we have a trend line here, a bullish trend line that the market is respecting. You get, we have a bullish trend line that the market is respecting. So this is a trend line liquidity. We have orders, we have people coming in, buying from here, buying from here, buying from here, buying from here, buying from here. You can see the market is not breaking. Let me, you see, we have swing here. We have this swing here that people are buying from. We have another swing low here that people are buying from. We have another swing low here that people are buying from. We've got ourselves another swing here that people are buying from. So all these places are trend lines. You know, the market is respecting the trend here. So these places are where liquidity is resting. If the market should reverse now, the market will come and take out all this order here because we have liquidity there. We have order resting there. The market needs to come and take them before moving again. So this is what a trend line liquidity is. Okay, the trend line liquidity here or what? Okay, so the trend line liquidity is just like, you do you know what a trend line is? Do you guys know what a trend line is? Yes, so a line that the market is respecting, either uptrend or downtrend. So if the market is respecting that trend line, if the market is respecting that trend line, it means the market is not like, the market is, the orders here are being respected. You get, so the market is respecting this thing. All this thing, it be like saying inside ChatGPT, just the go copy and come paste for here. Because a trend line is a strength line that connects two or more price points on the chart, acting as a visual guide to indicate the direction of a currency pair. Yeah, that's the like that's the meaning. That's the meaning. So like, but you need to understand it. I don't just want you to just write it down. I need you to understand it. Like I need you to be able to draw a trend line yourself. Because all these are components that will build your trading. You get? No, no, it's right. It's right. It's right. But it's very very obvious that it's from Chat GBT or something like that. So that's what a trend line is like. A trend line liquidity. You get the market is in an uptrend. All these orders that are here are trend lines. So the market is respecting it. The market needs to respect it. So when the market is coming back, it will come this in equal highs and equal lows. So equal lows are just an area in the market where the market is coming. Here. No, 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 no. Big thing is like this. Care how good as trader go is able to come to the chart and the market is going to sell. And no matter what any BS is telling you, your mentor, no matter what they are buying or they are selling, it doesn't concern you. You should strategy, you will learn from your mistake, you build your confidence in your own. So AI can be trading very quickly. Lucky one. Hear me now.